Happy Friday, everybody. Listen, on a serious note, let's get this out of the way real quick. I know I'm wearing an American Eagle teeny bopper little sweater hoodie thing here, but it's like 40 degrees in Florida, and I have one sweater. That's it. And I've been wearing that sweater for 4 days. So this is all I have to keep me warm here in Florida. We are freaking out down here. There's like no sweaters or jackets on the shelves anywhere. Actually, if you want to see, I bought the sweater in California. If you want to see the actual moment that I bought the sweater, I'll put a video up here. It's a family vacation that we took, and we just happened to film it. Let me know what you think. It was just kind of a fun sort of teeny bopper vlog style, but none of that. I don't want to see any comments in this section. Oh, look at this guy, how we take him seriously. He's wearing a hoodie. It's cold. I'm going to wear, I'll wear anything at the moment to stay warm. So leave me alone. All right, let's talk about the markets. The markets were up again, officially up, having their best start to the year since 2006. Unbelievable. 4 straight days up. The market wasn't open on Monday. So 4 straight days higher. And the big thing that nobody's going to talk about is the market actually closed at the highs every single day. So it's not like the markets wiggled around, then they gained a little bit, and then they closed. They were up every single day without stopping, nonstop. No drop at all, just straight higher. Let's transition here over to the charts real quick. This is the S&P on the screen. This is as close as you get, the S&P futures, and the 4 green rocket ship blips that you see on your screen. That's this week. That is every single day, opening and closing at the highs, just strong, strong, strong. I want to bring this in real quick to just kind of reiterate the type of market we're in. I mentioned this in yesterday's video. I'll put yesterday's video up there if you want to follow. Go back and watch that. This is how fast, this is a little chart I stole from JP Morgan of how fast the Dow moved from 1,000 to the next 1,000 increments. And look, it normally takes hundreds of days, but over the last few years, it's been speeding up. All of a sudden, it took 77 days, then only 64, then only 43, then only 35. Yesterday, we did it again. We moved another 1,000 points, and it only took 35 days. Well, if you look at where the Dow's at now, we're already 1/4 of the way to the next 1,000 points, and it's been 1 day. So 4 more days like today, and we would essentially break the record again. Doesn't that concern you a little bit? Now, if you're investing for retirement, all of my clients, we've all been over this. We want the markets to fall a little bit, not a crash. We just want them to fall so we can buy at cheaper prices. So I don't know. It seems like we're getting pretty close there. Here is what we'll look at. There's not a whole lot of very entertaining stocks making moves today. There was a lot of moving, but let's start with the most entertaining. World Wrestling Entertainment. Did you even know this was a public company? I can't type it at the moment. There we go. So World Wrestling Entertainment, believe it or not, very stable company that actually has a consistent profit, has a long track record of making money. Basically what happened is Wells Fargo, of all people, Wells Fargo came out on Wall Street today and said, we think that World Wrestling is a great company. We're upgrading it to outperform, which means they think it will do better than the market. And the actual notes that they said is, this company checks all of the boxes for us, and we believe it has a clear path of catalyst through 2018, which means that they think there's enough in their pipeline to get people excited to keep buying. That's pretty interesting. I would have never even guessed that a company would even follow World Wrestling Entertainment, but they're out there. They're making money. The stock's actually up over 50% since Halloween. So not bad, guys. Not bad. Let's look at another company you probably heard of not doing so well, Barnes & Nobles. Do you guys have a Barnes & Noble by you? I don't know if we do. I think maybe one a little bit north of here, but they're struggling. They have been struggling for some time. Today, the stock was down 14%. They basically came out and said, hey, over the holidays, nobody came to our stores, or less people than expected came to our stores. Don't sue me, Barnes & Noble. They said less people came to our stores. Actually, their holiday sales were down 6.4%, which was more than what Wall Street was expecting. Wall Street analysts had actually pretty much figured that they wouldn't do very well. They already expected a decline, but not 6.4%. Online sales, which, you know, that's something. You got to have online sales. Actually, those were down 4.5% as well. It's just not going well. Now, as we look at the chart, what technical traders like, if you trade because of a chart, This is a fresh breakdown. Stock broke down to new lows. I promise you the day traders were in there day trading that one today. And, you know, anybody that likes to look at the charts and make trades was likely playing along on that one. Just not good. It's only a $5 stock. They are not doing too well, and they basically admitted it today. Okay, CVS is the last one we'll cover today. CVS, you have a CVS by you. You know what this is. Basically, CVS came out. The shares were up 4.5% today. Basically, CVS said, hey, thanks to President Trump and the new tax reform, we put $1.2 billion extra in our pocket going into 2018. So what they're saying is for this year, they expect to have $1.2 billion extra dollars. Unlike the other companies, they didn't mention that they would give anything to their employees. They just said, thanks, we've got $1 billion extra dollars. So what excited everybody, why the stock was up so much, is because their comments actually included these words. With the financial flexibility that tax reform provides, the company anticipates making strategic investments in future areas of growth in business. Basically what that means in layman's terms, they're going to look to buy other companies. They've been doing a great job lately, but they're going to look to go buy other companies and spend the money on acquiring and growing rather than give their employees a little something. I don't know, you know, maybe give them $5 something, just let them know thanks. But nope, they're going to go buy other companies. So obviously investors love that. I don't know how the employees feel. I don't know anybody that works there, but stock did well today. So that's it. Other news, the jobs report came out today. The unemployment rate, I should say, is unchanged. The economy's strong. Everybody's happy with that and believes that everything will always be good forever. If you believe everything will always be good forever, leave a comment in the comments down below. If you get a chance, watch the video where I bought that sweater. I had a little fun making that video when we went on a vacation for my daughter's gymnastics. Maybe I'll share some more with you guys. I have fun making family videos. So let me know if you want to see more family videos, basically. If not, don't bother. I'll leave you guys alone. Thanks for watching. Be sure to hit subscribe if you would. I know I'm asking a lot today, but if you hit subscribe, that would really, really help us. Also, check us out, jazzwealth.com. If you need help with your retirement investments, we're looking at these stocks all day, every day. I think you'll like what you find at Jazz Wealth. Talk to you soon.